Welcome everyone to the Kendall Report. I'm Bob Kendall. It is Sunday night, and before we get down to business, make sure you subscribe and like these videos, and so I can keep up this content and the folks at YouTube know we're doing a good job for you. Well, there is a lot going on. The war, I kind of blew off a little bit about the aggression of what Putin was up to, and he's proving that he's very serious about the effort, what's going on, and it seems to be escalating from that viewpoint. And we're seeing the futures down pretty hard right now. But if we recall the last 2 days, Thursday and Friday, it was, buy the dip. And all of a sudden, we've completely erased, at least for the moment. We'll see how we finish up. I'll go through the details here in just a moment. But we're really looking at a situation where it's going to be very uncertain. I suspect lots of volatility. That's easy to say. Directional movement, I think, is somewhat defined, and I'll go through that also in the technicals. But we saw the futures up 97 points or 95 points on the close on Friday, and now I'm looking at this down 111. So we came in really weak. We actually printed down to the 42.51 level, and we bounced from there all the way to, I think, 14 or 17, 43.14 or 17. And then here we are back, sort of pressing the lows a little bit here. And on top of everything else going on, we've got a big week ahead economically. There's plenty of earnings reports coming out. This is probably one of the bigger earning report. We've got unemployment coming out, just a ton of stuff, right? Quick look back. We actually finished higher last week after the craziness, especially coming in as weak as we did on Thursday. and watching the market flip around and then follow through on Friday. Friday's trading was absolutely insane, I thought. Most of it didn't make any sense, but there was just a solid bid. The algos were all over it. Everything was buy, 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 and everybody said, this is it, this is the low. And I made the comment on Thursday night, we've got a long ways to go structurally from getting into any type of serious bottom here, and we're a ways away. So last week, S&P finished up 0.08. We're minus 8% for the year. So as we finish the second month, today is the final trading day of February. So we're going to get new calcs on all of our numbers and all of that stuff from the market grid on the monthly and the intermediate and the longer term charts and the secular charts. NASDAQ was up 1.1, minus 12.5 on the year. Russell was up 1.6. So Russell did a bit better, and that's been that pattern I've been talking about for a while now, that the small caps look a little stronger, but they're still going down, right? So they're down 9.6 on the year. So far the S&P, just like last year, was the strongest of all the indexes, and it's primarily because of the construction and how the S&P, what's in it as far as the constituents, has a little bit different mix than than the other indices. So, you know, NASDAQ's very heavily weighted toward those big cap stocks, and we saw those rebound. I haven't looked at any of the overnight stuff from the standpoint of looking at Microsoft and Google and some of those that bounce. I suspect they're off a little bit here, to say the least. But let's just talk about a couple things. Let's go through the economics coming this week. We've got Dallas Fed coming out on Monday, Chicago PMI. So we're getting PMIs. I don't know if anyone's going to be worried about or even thinking about any of these numbers, right? Tuesday's got ISM manufacturing. Wednesday, ADP, it's unemployment week. So we've got ADP coming out, looking at 320K new jobs. Thursday, claims 232, and factory orders also will be out at expecting to be up 0.5. So the economy basically appears to be doing pretty good. But as we'll go through here in a minute, we're seeing crude oil prices get jacked again. The PCE came in on Friday at 0.6, a little hotter than expected. Year over year was 6.1. You know, the Fed, we'll talk about the Fed a little bit because we're getting closer at least to the March meeting that's coming up, and that's going to be interesting as well. So I'll talk about that a little bit here in a second. But we're really looking at, you know, the economy appears to have pretty good footing, you know, in spite of, and what we're seeing is just a lot of protection coming on. And I'll go in, I've got a couple little mini rants to go through tonight, but we're looking at the Dow rallying. I'm looking, a rally right now on the Dow is getting a little out of control. 97.25 up 0.72. Interesting enough, nobody in the gold pit cares about that, so we're seeing a bid there as well. And I'm going to cover the Dow tonight. I normally don't cover it, but I think it's worth covering. There's some interesting projections coming out for the Dow, and sometimes you get into these market scenario and you really, how the best way to put it, nothing makes sense, right? The way the markets are trading and how they respond to things, like maybe, you know, I think there's an old saying, like when the tanks start rolling, you start buying or something. There's some kind of little cliche about that. And I've seen this in the past, but I think that little trade is over, but we still got a lot to talk about in the technicals here on what's going on there. Let's talk just a bit about earnings. I'm just going to do a general sense, but there is roughly about a little bit over 1,000 earnings reports coming out this week. It's pretty heavy load. Monday is really kind of a mixed day, but Tuesday we got banks and retail. That's going to be the focus. Same thing on retail on Wednesday is where the big reports are coming out. And then we've got on Thursday, we've got banks and retail again are kind of focused. Friday there's like 12 reports and there's nothing significant, but the earnings are going to be hanging out there. But like I said, I don't know what type of news we're going to get out of the Ukraine, what type of things are going on. Just, all right, it's time for a little mini rant, but it's just becoming unbelievably obvious that the people making decisions in Washington and maybe around the world are just making some really bad choices. And this whole thing with the SWIFT and all that. Listen, they already knew that the SWIFT was going to be in play going back to 2008 when Crimea happened, right? So there's the same script, but you've got the how's the best way to put it? You had basically the same people running the government that were running the government when Crimea happened, right? So here we are on the next level of things, and it's starting to get really ugly over there, and it's looking like a real war. I thought it was going to be kind of just a standoff. Well, that's not what's happening. That it's getting serious, and I have no idea what kind of news we're going to have. And war is just ugly and unpredictable, and who knows if this thing starts to continue to escalate. And that's basically what the market's responding to, right? It's becoming so uncertain that do you really want to own risk assets right now? That's the real question that's coming on. Let's talk just for a minute about the Fed. I know a lot of folks think that this war situation is going to change the Fed and how they're going to handle things. I don't think it's going to. I still think if the Fed was smart, tomorrow at 3:59 p.m. Eastern time, they would announce that they've stopped all purchases of any type of treasuries or mortgages or anything. They need to stop this. They should have stopped it 6 months ago. They certainly should have stopped it last month, or we'll say this month in February. They should have went early on that. And they're not going to be able to change what's going on. The PCE numbers is what they focus on. Those came in hotter. And guess what? We're going to see continuing inflation surging going on. Now, a lot of folks are talking about food and other items that might get really hot just due to the Ukraine situation. We'll just have to wait and see what's going on there. I just think there's been a great underestimation of this, including when I was looking at it, I thought maybe this was just all posturing and there was some kind of deal going to happen. I didn't really buy into the whole invasion and the bombing and all the things that we're seeing here. So that has brought in a new element. And once you start that, there's no going back, right? You have to complete the job now. And then you've got the news services are, I'm not saying they love the war, but they love the war cycle, the news cycle. And this is going to drive the algos and all the stuff that we're going to watch this week. So should be interesting in the live trading room tomorrow at 1 p.m. So I'm looking forward to that session and just being able to try to unpack what's going on and see if there's any good trades that are laying out there. But overall, I think just prepare yourself for tons of volatility. I know that's like the most obvious thing there is to say, but it is the way things are set up right now is going to continue. And we saw an increase of that. So let's go ahead and let's dig into the database. And I'll get that up there so that we can take a look at exactly what's going on. So let me zoom in on that and take a look at the database. So it's kind of interesting. I'm going to go through the weekly. As you know, on Friday, we run our weekly intermediate, and we actually saw a little bit of selling. It was basically a rotation, but I'll go through the dailies. I have that up on the screen. We're at 2243. We upticked just a little bit. We had 871 buys versus 105 sells, so we got a little bit of a bid that came in, few items were picked up, but nothing material. We literally have to get this database well over 42% to even get into something that we could start to recognize as a recovery and things starting. So that is going to take literally, I would say, weeks coming from this situation. Even if we trade it up into some of the numbers I'll talk about where the big resistance levels are as we come into this week. I'll point that out in the technical section here in just a minute. But if we go, if we look at the weekly, we look at the weekly, what you'll see here is we're at 16.87. There was actually 277 buys versus 356 sells. We were at 17.3 or 4, I forget the number right now. We didn't move much, but we're not getting any traction, and we're not likely to get any traction here as far as that goes. The way this database works, and especially in an environment like this, it's going to stay in what we call protect mode. So if you are running a portfolio in our system, most likely right now with any of the weekly scenarios that you're doing, you have anywhere from probably 50 to 60+% in cash. And depending on what you own, you could have 100% in cash. And you've been that way for a while. It didn't happen recently. This actually happened as we go back into January, around January 7th, and then 24th was some big tranches of orders that came in. So this database is going to take a while on an intermediate level. This is right now coming into March. We could be looking into April before we get enough consolidation if prices hold. And it's very likely that we've got some more downside here, and we're going to make some big determinations. I'll talk about that in the technical section here right now. So we'll start off with the daily S&P 500. And you can see that we closed above the 10-period moving average, but we are still somewhat in a negative mode. Right now, the PPM1 is at a minus 0.29, which is a downtrend. PPM2 minus 0.16, and PPM3 is a minus 0.28. So all of the moving averages are in this downtrend, and it looks like one of the things I've been talking about for a number of days now, probably going back about 5 or 7 days, is the slope here. I'll just put a cursor on this so you can see this middle indicator, PPM2, is actually right there, and it's starting to cut through its first and second derivative. It's been actually moving up and suggesting we got a shot at maybe stabilizing here, but that is all changed overnight. Now we've got I'll bring up the market grid here just so you can get an idea of where the expectations are for today. We look at the range so far today. The low has been 42.51. S3 is 42.58, so we've actually traded below S3. STX is 42.20. The number that I talked about last week still is the number to watch. 42.12 is still the pivot. Even though we spiked down on Monday of last week, we spiked down to 41.01. That's still the pivot in this pattern. We close under that level. We still have not got a close. On Monday when we spiked down, we actually closed all the way up at 42.84, well above the 42.12 trigger. And then we followed through on Friday. Now we are trading back down. We're down 2.57% overnight. Now, what we've seen in the past from this standpoint is we've seen these rebounds, especially I would watch the action for those of you that are coming into the London opening. I was talking to somebody earlier today. I was talking about the London Open is typically where a turning point is going to happen if on the overnight session. That will happen, and it kind of sets up. There's a lot of folks, especially East Coast folks, that will come in 2 and 3 a.m. local time in New York to get there for that open, and they'll start trading at that point. There's a lot of activity. I used to stay up all the time just to trade that opening range. So that was a really big, there was always some opportunity there. There'd be a dislocation, and it was more pronounced a while back because a lot of this would actually, S&P would be used as an offset or a hedge against what's going on with the FTSE and the European indices. So this was an opportunity to trade off of what their opening was looking like. So it was very, very interesting scenario there. So watch that coming into the London situation. So we're probably potentially S3 could end up to be the low, which is 51.50 was the actual low, or 68.75. And the high so far today has been overnight 43.14. If we look at S1, it's 43.42. R1 is 44.17. That's certainly a possibility due to the type of volatility we have, but I think we're going to have a hard time getting over that 10 period moving average, 43.39. We'll call it 43.40, especially with a ppm of a minus 0.29. There's only about a 30% probability to get above that level. Right now we're sitting here, that is 85 handles higher from where we're at right now. The overall configuration here on the daily chart looks pretty negative, and that close under 42, we get into the numbers I've been talking about here, these Fibonacci targets down below. I'll put them on over here, but they are 40, 59, 38, 58, and 37, 33. Let's take a look at the weekly. We're just going to stick with the futures for analysis here. Weekly looked pretty interesting last week because we got that big reversal off the lows and we closed near the highs of the week. But now with what we're seeing now, we're most likely going to get an inside trading pattern or inside bar this for the week. So we're down 113 at 66.25. The STX level on this, the extreme projection right now, 41.65, S3 42.15. So right there at that 42.12 pivot that I was just talking about, that's going to be your key area, 15.12, right in that range. You get through there, then we're going to be back under into the 41 handle again, and probably not going to print down to retest last Monday's low, but who knows? There, like I said, there's going to be a lot of uncertainty around this pattern from the standpoint of what's going on. So just be aware that the volatility is going to be kicked up. I'd be very cautious about, maybe getting too convinced that you can buy the dip down here. It might work, but one of the things that I talk about all the time in the live room is you need to have structure around your trades. And what that means is you need to have some multiple days where you get some action. You could use an hourly chart, something like that, to try to set up maybe a shorter term pattern. But in real world, it's going to take more than what we saw last week, 2 sessions, to rally back up, and especially with the PPMs rotating like they are. We look at the PPMs here on the weekly. There's something really interesting. PPM1 now is a minus 0.99. That is beyond a full-blown downtrend. PPM2 minus 11 and PPM3 is flat. But what's happening is the 10-period moving average is starting to cross through the 21, and ultimately it's going to, actually it is getting through even the 40 here. 44.60 is that number. We're 44.78. It's not quite there yet. But with this type of acceleration on all these PPMs here, this is a serious downtrend that's forming here, and raising the probabilities of going down to those Fibonacci's at 4,000 handle and maybe the 38 handle is becoming more and more probable. It would have to close above 44.50. And as I mentioned just a minute ago, this is the final trading day of the month. So we're gonna complete this month range here. And I'm going to bring that up. So I'm going to spend most of the time, as usual, on the S&P, and then I'll relate this to the similar patterns that are on all of these indexes because they are somewhat similar. So if you recall, going back, the month of January, we had that giant range. My original hypothesis, I did a video I think 3 weeks ago now, that I thought we would stay within the range of that monthly range, which was 42.12. There's that number. 48.08 was the high on the futures. I thought we'd stay within the grid here. We did spike a little bit below the grid last week. At the bottom end of the grid was 41.39. We spiked down to 41.01. I think we'll stay in this grid. And the one thing that is still there's still positive long-term secular trends in place. PPM2 is at 1.57, but what's interesting is we're seeing the cross of the second derivative, and just a quick lesson on these PPMs is that when that happens, it suggests that we're going to test the value of that number or of that moving average. That PPM2 tracks the 21-month. So it's 39.68. If we look at what's going on, it's about 60 handles. So we're going to be around 40.20, which is going to map out really closely to those Fibonacci objectives that come out of that daily pattern. All right, next we'll go to the NASDAQ. And like I said, all these patterns are pretty similar. NASDAQ has had a little bit more negative configuration, but we're seeing the PPMs roll over here, -3.3, -0.22, and -0.45. So this downtrend is pretty substantial. The downward targets, which we almost met on, I guess on Thursday morning, we got down to 13.025. 13.095 was S3. So we got down to that level, but we look at the Fibonacci projections down below here. You can see them on the right-hand side. I'll just put a cursor here. 12.956 is a minimum. That's only about, I say only, 1,000 points away, but 12.076. So looking for something probably below 12,000 if we get these confirmation close, and I would use the S&P 500, that 42.12 trigger as a confirmation for that. But everything's starting to point toward that. That price low that we printed at 4,100 on the S&P and the price low that we printed here at the 13.025, those are still valid numbers. You got a pretty substantial reversal. We did get the close over the 10. We got all that. So there's some structure building here. So the next two sessions are going to be critical, and I'll make sure I cover this tomorrow night. If I see anything on Twitter, I'll try to do that. I'm in the live room from 1 to 4 tomorrow, so I'm usually too distracted to come out on Twitter and do anything. But if I see any setups ahead of time, I'll try to put something out on Twitter. And as you know, I'm at Twitter/portfolio expert, and there's no E in the expert. So this is a pretty serious pattern here. We're looking at right now, the low's been 683 overnight, 673 is S3, R1 14,337 seems pretty unrealistic, but with the volatility, we could see an R1, S3, same thing with all these indexes. Let's just go to a weekly just quickly since it's the beginning of the week just to get some context here. So 13,710 is the S2 level, so we're very close to that. S3 is 14,462, and STX, this is weekly, is down at 13,240. So that these levels could be challenged. And when we look at the PPMs on this page, these are really crazy strong downtrends are forming. 1.618 on PPM 1. PPM 2 is at 0.32. And I want to point out something. I talk about that rising 10 pattern. Well, this is the declining 10-week moving average into the market grid, and that will typically define exactly where the top's going to be. That's at 14,725, and so that number is not going to move a lot. This is the weekly, but that is a substantial number, and even if we did trade there, you'd be looking to sell this market. Doesn't look like we'll get there, but with that reversal, that's going to be the key. So we look at the NASDAQ reversal. The high last week was 14,196. We get above that level, then all of a sudden S1, R2 are in play. It's going to be an interesting week. I expect a lot of volatility. This weekly downward pressure, though, is substantial. So I'm going to go with the weekly only on the Russell. And Russell had the nice reversal, but the 10-pair moving average 2086, we're looking at a minus 0.63. There's only a 30% probability to get above 2086. And that was a pretty decent rally that we saw last week. You can see we finished up 2.25% on Friday. So this was impressive to say the least. PPMs are all turning up. This is weekly. These are most likely going to be turning down or at least flattening out as we come in. And we look at the RTY, I'll show you exactly. It's down 3.18% right now. So this is what the PPMs, this is the Russell futures now. This is what they look like once we get prices on the cash and we stay near these levels. We're down 3.20 and you see the PPMs all rolling over and accelerating to the downside. So the from a future standpoint on the RTY, we're looking at the heavy duty resistance 2056 on a weekly basis. Okay, this is going to be the midstream roll here, and I just want to, like I said, just to update you again. We're going to go through the 10-year. I'm going to do the Dow, then we'll do crude oil, gold, and then Bitcoin, and we'll be done for the night. So as we look at the 10-year, it's been doing as I've been expecting, staying in this sideways range here. We're not really seeing it trying to break out. The PPMs are very strong for sure. 3.38, 1.53, and 0.58. So there's upward pressure for rates for sure. The level that I've been talking about is at 2.12. That's your extreme. But I think if we look at the market grid as we look into this week, 2.02 should be the peak. Maybe if things get crazy and there's a flight to safety bid, then the S1, S2 are going to be about the end, 195, 190. So look for 202 extreme downside, 1.90. I'm not going to show you the yield curve, but it is continuing to be flat and staying down at these extreme levels. There doesn't appear to be any acceleration from that point. So the next market I'll cover is the US dollar. And dollar has got some really crazy Fibonacci projections, 102, 104. And it's interesting what's going on here. And you're looking at the PPM starting to cut through their first, second derivative on all three of them here, and that's significant. The grid from that standpoint, we're already trading up around S3 here. Let me move this scale so you can see it. 97.37, R2 97.25, 97.58, 97.87. But this is a very strong looking chart, and we're starting to see a potential for a breakout. So before that, what's interesting about this, and because I'm going to show you gold next, and actually I'm going to go to crude oil next. What we're seeing here is interesting that markets don't seem to be gyrating, and you almost would think, I think there's some reasonable risk that this swift situation could be a negative on the Dow, but right now it looks like everything's positive, that maybe it would change Dow flows or something like that. And for the most part, Russia deals in dollars, but I don't think it's going to affect them that much. But at least the markets are making a bid here for the Dow, that the Dow is going to continue to be strong, and that setup suggests we're going to see higher prices. And what's interesting about that is when we go through crude oil and gold here in a second, you're going to see like this. This is one of those things I was mentioning on the opening comments, that we're really, sometimes we get in these configurations of the markets and they don't make sense on how the puzzle's fitting together. Ultimately, the puzzle breaks, but for right now, the pieces they're working in a way that you wouldn't expect them to work. The puzzle pieces aren't going to fit together very, very good from that standpoint. Next market is crude oil. Crude oil, this is the weekly chart. We did print up over 100 the other day at 100.54. I showed you, I think, on a monthly chart, that's almost an exact number of the 200-month moving average. But here we are looking at, from this standpoint here, this is already the calculation. It's interesting, I don't know why that is, but it's showing the calculation for 3-4, and this will update tomorrow. So this looks like to me that we're going to stay below this RTX number, RTX 99.68, 97.77, 99.68 should be the upper end. This will be interesting to cover tomorrow night when we come in, but the PPMs are super strong. We still have lots of target prices above here. We're looking at 99.45 is the top end Fib number, but if we go over to the previous Fibonacci calculations, 98.93, 106.21. I will go over to the monthly chart. You'll see that 200-month moving average right there. 200-month right now is 100.75. We printed 100.54. And actually, I was looking at the weekly chart, not the monthly. That's why it was calculating as it was there. So, but here's the other thing. I keep showing you folks this pattern. This has that rising 10 pattern, which is a rising 10 pair moving average into the market grid with heavy duty acceleration of the moving average, or the angle of attack is so steep there's less than a 10% probability to drop below that level. Well, that level's not in play right now. It's 73.32, but that will update right now. It looks like about $4, so it's going to be around 77, and as we come into the months ahead, we're going to have solid bids between 78 and 84 as major secular support. So no matter what happens, there's still some pretty big numbers there. The only thing I think will happen here is I believe this 200-month moving average will actually hold, at least for the short term, 102.90. Let me get the right number here. That number is 100.75. I think that's going to be the top end of this. We got a declining 200 range, although it's trying to flatten out a little bit. We'll see how that all plays out as we come into the month of March. And really, we're going to have to wait till probably April to get there. So I'm going to start with the monthly gold chart. And I talked about this the other day. And this is significant. We have ppm1 at a 0.73, ppm2 at 0.30. So we have circular uptrends. The only thing that is likely to happen here, any close tomorrow afternoon at above, let me get the RTX 1888.20, which looks pretty likely at the moment unless there's a big sell-off, is going to set up probably 1 to 2 months sideways or consolidation, and that's actually going to be healthy for this trend. There's still, this Fibonacci is not calculating anymore, but there's still some upside potential in this market up to as high as 2200 plus. So this is the longer term, and this is not something, this is a monthly graph or secular trend. That's not going to happen overnight. We're talking about, 8 to 12 months or longer. Let's go to the intermediate. We managed not to get the RTX sell the other day, but we're printing up right now as we come into this week. We're looking at the range of being R2 is 23. We've traded above that. We're almost to R3. This is a weekly chart. Up to R3 is 1943. 1960 is the RTX. And last week we did spike up to 1976. So that was pretty way overdone. And then we saw a complete collapse of prices, which I thought was really interesting, all the way down into the 1880 level, a little bit below that, and now we're rebounding back up again. So we're up 1.21%. Let's take a quick look at the dailies, because I think there's going to be some pretty good activity here from that standpoint. So we get this volatility, I call these volatility bubbles on the market grid. And typically what happens here is when you get into this, we do have the rising 10. This is daily 1897. That should be your bottom end. You got ppm1 rising at 0.22, 0.31 at ppm2. So we should stay within this range. If we look at what's happened overnight so far, 1935, 1906, trading 10. So we're trading down at that lower end, but expect to see this 1897 level hold this market, and we should close probably around R1, maybe R2, somewhere between 1900 even and 1914. So we're seeing a little bit of a reversal. Probably has a lot to do with that strength in the dollar. Final market I'll cover tonight is Bitcoin. Bitcoin continues to trade within the market grid. Just looking at the last couple of days, we traded down to 34,341, 34,332 was S1. And then the next session, we traded down to 38,044. That was just above S1. Looking at a high 39,968. That's right at R1. And now we're seeing a little bit of downside here again. They're bouncing off the backside of these averages because the ppm1 is at minus 0.56, which is going to put a lot of resistance at 38.9. That's going to be probably your cap in the markets right now. R1, 42.96. Probably S2, 37.440 is where we should hold. We've already printed down there. If we take that level out, then maybe 36.415. This is still by no ways any kind of bullish pattern here on Bitcoin. The PPMs are still accelerating and looking like there's going to be more downward pressure. The weekly chart will illustrate that even a little better. The ppm1 is at a minus 0.217. minus 0.92 ppm2. So there's a lot of downward pressure. 41,663 is the 10 period moving average, dropping about 800 per day. So that's going to be that 40,003, somewhere around there is going to be where your heavy resistance is going to be. And there's still going to be lots of downward pressure here in this trend. And I still think there's a possibility to print some of these Fibonacci numbers down here. I'll make sure you can get it on screen here. 34,090. So far we printed in this range. We printed down to, let me just update this, make sure I'm at the right place. Yeah, 34,341. So we printed down just below S3 here. TX is 33,434. And these numbers are going to update here in just a couple hours. So they'll be a bit different, but I think what we're going to see is the market grid turn down. So we're going to start to set up even more possibilities of us getting down into that, below that 34 handle, 34,000. Okay, folks, that's going to do the video for tonight. And sorry for the late start. There was a lot of things going on earlier tonight. So hopefully you found the video informative. And let's see, how did I do? 46 minutes, a little longer than I wanted to be. But, you know, this will be it till tomorrow night. Those of you in the live room, see you at 1 p.m. Eastern time. And I will see you folks tomorrow night on YouTube at the same time, roughly around between 9:15 and 9:30 Eastern. Thanks a lot.